Well, hello everyone. This is Rob Reinhold. Welcome to Incorporate Your Trading. Now, this is something I never really had any intention to know anything about. I started trading back in the mid-90s. My first trading year was that I could consider myself a professional was 1997, but I only traded for a couple of the end months of that year. I traded in 1998, and 1999 was my first what I considered really good year as a trader. And during that year I was very active. I was actually doing a lot of intraday trading to where I was in and out. And throughout the year I just wanted to trade. And so I was just trading, and I wasn't even thinking about keeping records. I wasn't thinking about taxes. I wasn't thinking about anything. So at the end of the year I get done and I start talking to my CPA and I turn in the stuff I need to, and he said, uh-oh, we are going to need to file an extension. And we filed an extension. And during the next 6 months, it was a lot of work because I wasn't set up correctly. I was doing this all basically as an investor in my own name. I wasn't set up correctly, and because of that, I had to list every single individual trade, and when you're not set up correctly, you have the most reporting you need to do, and you pay the most in taxes. So I had to put together 2,200 trades in and out. Where did I buy them? What date did I buy them? Where did I sell them? What date did I sell them? And what was my gain or loss? 2,200 trades. That was ridiculous. And at the end of it all, we finally got it done. My tax return had about 60 extra pages stapled on the back that were just my trades. And my CPA gave me a big fat bill, and I'm like, oh, that's ridiculous. And then I got a big fat bill from the IRS and a big fat bill from the state. And it was at that point I realized I need to spend some time on this, and I need to figure out what the best way to do this, because I didn't really care for that. So that really led me on a journey to really learn about this, just mostly for myself, to how to simplify everything, how to save money in taxes. But again, I started it about myself. Throughout the years, I've learned more and more about it. I've had a chance to study a lot more. I've met some really smart people in the business. I've seen it at work. And at this point, I am by no means an expert. There's experts out there. But I do know quite a bit about this. So again, this isn't really about trading. It's about how you do your trading. And to me, this is a no-brainer. This is a no-brainer. When people say, I'm not going to do that, I really just scratch my head and say, I don't understand why. There's nothing but benefit to you because you are already in the business of trading. You've already had expenses. You've already spent time. You actually have already fulfilled the requirements that the IRS has for you to be able to start up a corporation. Start it up. So, the purpose of this session here is to basically take you through the whys. So you're going to see that I'm going to spend about the first couple minutes basically selling you on why you should do this. It's going to be a sales job. Now understand that if you choose not to do this, it doesn't hurt me and it doesn't help me. This is all for you. But I wanted to make it very clear of exactly how it's going to work, how to get it set up, what are the benefits, how's it going to save you in taxes, how's it going to help you protect your assets. And then what I'm going to do is I'm going to go through some places to go for some help. There's a lot of this stuff I think you can do yourself. I'm going to tell you which one of those things I think, and then there's some stuff that you should not do yourself, and I'm going to tell you which ones those are. Alright, so let's start up right away. As I said earlier, the fact that you have already started in business, you're spending time, you're spending money. The IRS requirement is that you must be engaged in the business with the purpose of making a profit. Let me say that again. You must be engaged in the business for the purpose of making a profit. Now, you don't have to make a profit, you just have to be trying to make a profit. And if you can prove to the IRS that you are trying to make a profit, then you qualify to open up an entity. So the way this works is that it's its own entity. And so instead of you being the trader, you are simply going to be the CEO of a company that is doing the trading. And so the reason this works is it's not you, it's its own entity. So you have to start up an entity. In the US, there's C corporations, there's S corporations, there's limited liability companies, LLCs, there's partnerships, there's other things. In Canada, there are less choices, meaning you have one choice, basically a Canadian corporation. When we talk about C corporations, if you are Canadian, I want you to just say in your mind that anytime I say the word C corporation, I'm talking about a Canadian corporation. They basically have the same rules. The first step is going to be to open up one of these entities. I'll walk you through the process of how to do that. We'll talk about it. But once this entity is in business, remember, you are not the trader. You are a CEO of a trading company. That's how this works. And so the company is its own entity. And because the company is its own entity, well, guess what? They pay taxes on lower rates. One of the benefits is that trades are considered business income and loss. If you're trading as a business, it's business expenses and business income. If you're trading as an individual investor, all of your trading needs to be in capital gains. Now that's one of the worst rules that I've heard of, because if you make $100,000 trading as an individual investor, you pay taxes on the whole amount. But if you lose $100,000, well, they'll let you deduct $3,000 for the year. That's it. So you pay tax on all the gains and you don't get the benefit for any losses. Now, you can carry forward that $3,000 for the rest of your life, but not right away. So the big benefit is you're going to look at lower taxes. Your trades are considered business income and loss, which gives you a lot of flexibility in that. You're allowed to take deductions to reduce your overall income. You're a business, you're in business, you're going to have expenses to doing business. All of those expenses can be written off of your trading income. And all the assets in your corporation, remember, they do not belong to you. They belong to the corporation. The corporation has its own entity, it has its own tax ID number, it owns all of its assets. If you have $50,000 in the trading account in that corporation and someone sues you, well, guess what? They can't touch that money for the most part, especially if you do it right. So there's just so many benefits to doing this as a business. And as I said, you're doing the business anyway. It's just a little bit more work and paperwork to get things started out. Let's talk about the immediate benefit, because you're going to see that there's going to be a few stages of benefits to you. The first immediate benefit is going to be deductions. This is your first one. So the things that you can deduct as a business, some can deduct life and health insurance premiums. How would you like to have your corporation pay for your key employee life insurance? All the big corporations, they have key policy insurance on all their CEOs. Because if something happens to that CEO, it will greatly affect the business, and so they insure that. Well, you can do the same thing with your business. So if you're already paying for life insurance, you could possibly look and see for paying for key employee insurance. Basically still life insurance, but the company pays the premium. Home office, usage of home. If you have an office that you're not writing off already, then it's going to be a place of business. Wherever you can consider your place of business, that can be a deduction. A company vehicle. Now, of all the things that get people in trouble with the IRS, a company vehicle is probably the top one. So I'd say be careful with this, but again, learn how you can do it. Can you deduct 30%? Can you deduct 50%? You can deduct the maintenance. All of my cars, except for one, are owned by a corporation. They're in business use, and we keep personal and business miles. Any business trip you take, we have traders come out to the office sometimes and meet us. That is a business expense. They came out to the Maverick Trading offices. It's a business expense. Some traders go to trader expos around the US and the world. That's a business expense when you do this as a corporation. If you do it under your own name, it is not a business expense because this is not considered a business. It's considered a hobby. That's why you're stuck on Schedule D, capital gains and income. Continuing education. Anytime you buy a trading book, it's a write-off. Anytime you subscribe to a website, it's a write-off. Any money you spend in this business is a write-off. Any money you spend with Maverick, it's a write-off. And then, of course, office equipment, computer, cell phone, your desk, your chair, anything that a business needs to have to conduct business for the purpose of making a profit can all be deducted. Hopefully, as I went through that list, you said to yourself, oh, I'm paying life insurance. Okay, I can look at that. Okay, I'm paying internet at home. Well, I need that for trading. I'm paying for my cell phone. I need that for my cell phone to check on quotes. Hopefully, you've kind of made a mental list of all the things that you are already paying for, but you're not getting any tax benefit for it. If you open up a corporation and you trade as a business and you do it correctly, you can take a lot of those expenses that you're already paying for and move them over into the corporation. All right, I'm going to do a quick little case study for any of you Arrested Development fans. I named this couple Bob and Susan Loblaw. Now, Bob Loblaw is a character off of Arrested Development. If you haven't ever seen that show, it's hilarious. But the lawyer's name is Bob Loblaw. And as you can tell, it's just a jumble of words. So I kind of thought, that sounds funny. But basically, I wanted to take a theoretical couple, or a theoretical person, and take a look at basically what they are doing now. And again, let's just take this theoretical couple. Let's say Bob, he makes about $75,000 at his job. Susan, she makes about $25,000. So basically, for the year, they make about $100,000 for the year as a couple. Now, as just a regular person, they're going to get paid. They're going to pay taxes. They're going to have housing expenses, utilities, they've got cars, they've got insurance, they've got credit cards, they go out for dinner, they go on vacations. Basically, this is the budget. So as you can see here, once they've paid all that stuff, you could see that there's not a whole lot of money left. Once you go through life, and you all know what I mean, you go through life, you've got your chunk of money from your paycheck, you go out, and at the end of it, it's like, wow, that's how little I have. Again, they're doing a good job. They're putting $500 away in retirement. They're saving up. But in the end, they don't have a whole lot of discretionary income. What's left? Let's take basically a side-by-side where they start up a investment company. They call it SB Investments. They both own 50%. In this example, Susan is a real estate agent. Here's a great thing. Any income that you get that is not W-2 income, where you're an employee with a job where you get a paycheck, if you are a consultant, if you are a contractor, if you are a small business owner, if you are just a handyman and work on the side, all of that income can and should be put into a corporation or an LLC. So just think about that, and hopefully you've gone through your own life, said, okay, well, I get paid a couple $100 a month for this. Well, that should go into a corporation. because you want to put income into the corporation, because then you can get expenses off of that. So let's just take a look real quick. Their income didn't go up. Their income stayed the same. But what they did is they basically moved things from expenses over here that they got no benefit for and wrote it off. Now they wrote all of that stuff off. For some reason, this should be over here, because we're going to talk about a SEP IRA, where you can open up a SEP IRA and contribute to your own retirement, and your business gets a write-off. These SEP IRAs are great. You can put a lot of money away. If you're a high earner, you can put sometimes $40,000, $50,000 a year away, tax deferred. But in the end, they basically were able to reduce their income, their total income, or what's called adjusted gross income. This is the amount of money you have to pay tax on. And they didn't do anything different other than set up a corporation and run some things through the corporation. So that alone was worth $450 or $5,400 a year. That's a big deal. Very small thing you can do. And understand, I was very conservative in this. I was very conservative. I mean, we could move retirement over and that would create another $6,000. Just right there, contributing to a SEP IRA would actually contribute another $6,000 for the year. So we're talking $11,000 in savings for this couple. And yes, it costs them a couple $100 to incorporate. They're going to have to fill out an extra tax return every year, which is going to maybe be another $200 or $300. But it's absolutely worth it. Think about what are the things you're already paying for. And make sure that you look at this, you talk about doing it as a corporation, you say, okay, what can I move over from personal to business expenses legitimately and legally? You're probably going to hear me say this about 5 more times, so let me say for the first time. We are dealing with law here. It is not worth breaking the law to save a couple bucks. That's where you have to educate yourself, make sure you know what you're doing. If you don't know what you're doing, get some help from someone who knows what they're doing. The government wants you to do this. They are incentivizing. These are all incentives. We want people to start small businesses. We want people to take risks and put money to work. They're incentivizing you. Go out and do this, and we'll give you some incentives. All right, so right there, again, the first thing I wanted to show you is that there is going to be an immediate savings on your taxes. Let me go back and take a situation. And again, people say, well, Rob, it might take me a year or two until I'm profitable in trading. That's fine. Remember, you don't need to have a profit to be a corporation. You must be in the pursuit of making a profit. The fact that you've already put time and money into this is going to prove that. So let's say the first year you actually are still working towards training, you're still working on getting things going, you're going to have no income for the year. However, you might have $8,000 in expenses. Now, will the government allow you to do this? Yes, they will. The government understands it takes people some time to get businesses started. And they understand that there are expenses that happen before income starts to flow in. So this first year, you might report an $8,000 loss in your business. Now remember, this $8,000 were things you were already paying for. You're already going to pay for them. But now you have an $8,000 loss on your LLC or corporation. And on the very front page of your 1040 form, you actually list your income. So let's say you have a job where you made $70,000 for the year. One of those lines is going to say K1s from LLCs, corporations. On this line, it's going to be minus $8,000. Your adjusted gross income is going to go down. The amount of money or the amount of income that you have to pay taxes on is now lower, meaning you will save taxes. The way to figure out how much this is going to save you, take your deductions time it by your tax rate. If this person was in the 25% tax rate, this just saved them $2,000 in taxes. As I said, there's going to be an immediate benefit to doing this. Take what you can deduct legally, times that by your tax rate. That's what it's worth to you. So if you need a little bit of incentive, say, okay, is this really going to be worth it? Why don't you go ahead and write down all the expenses for the whole year, times that by your tax rate, and I think you'll be pretty happy to go do a little bit of extra work to get this set up. See, I told you I was going to try to sell you on this. I'm going to try to sell you on it. All right, that is the immediate benefit. One of the secondary benefits is the asset protection part. Asset protection really starts to come into consideration when you start to have a lot of assets. I could go down and talk to a bum on the street about asset protection, and he thinks I'm talking about their shopping cart or their sleeping bag, because there's not a whole lot that they own. Once you start to own more, once you start to have more, asset protection starts to be a big deal. And one of the things about asset protection, it's so important, is that there are lawsuits out there that happen. And anytime that there's a lawsuit, whether it's from an accident, whether it's from negligence, again, whatever it's from, the way that the whole system works is that whoever is coming after you, they go to a lawyer. The very first thing a lawyer does is they go do an asset search. Okay, what assets does this person have? You would be really shocked to find out how little time it takes a lawyer to find out exactly how much is in your retirement accounts, how much is in your bank accounts, what your house is worth, what the mortgage is on it. They can find all that information out in probably 10 minutes. They're going to run an asset search. If there's a lot of assets, then they will probably take the case. Okay, you know what? I think there's enough here. If there's no assets, you may find that no lawyers will take the case. Owning your assets under a corporation, it's not under your name. It's not under your name. The corporation owns it. So if anything bad happens to you, the corporation is its own entity. If anything bad happens to the corporation, well, then you're okay because you are your own entity. As long as you set this up correctly and you don't break the law and you follow it, this is how corporate law works. So as you can see here, there's a way that you can actually really break up your net worth. And this is something that will definitely grow over time as you build your wealth. I know I started out with an S Corp, and I think today I've got about 10. It's actually become quite complex, but I want to make sure that in case anything does happen to one or the other, that I'm protected. I spent a lot of time building this up. So that's going to be a benefit down the road. Obviously, at first, let's get you started. Let's get you saving some money in your taxes. Let's get you running as a business. But this is going to be something that is going to be a great focus for you down the road. At this point, I'm just going to assume that you're sold. You're saying, okay, Rob, I get it. This is going to be good for me. How do I do it? I am always a big proponent of knowledge. I absolutely hate to go into a situation where I don't have knowledge and someone else does and they tell me what I need. Case in point, my son has always been into cars. I'm not a car guy. I can probably change the oil in a car. It would probably take me about 2 hours, but I think I could probably do it. After that, I'm completely unqualified. I don't know anything about cars. Well, my son has gotten into drift racing lately, and we now own a Nissan 240SX, and it's needed way more repairs than I care to admit. But I can't stand it when I go to the repair shop and they tell me, well, you're going to need this and this and this, and I don't know if that's what I actually need. And I just hate that. I hate not having the knowledge. Now, if I knew exactly what I was talking about when it came to a car, and they said, hey, we need to replace this, this, and this, and I knew that we only needed to replace 2 out of the 3, then all of a sudden I could say, okay, you do these for me, I'll go do the other one, and I know. So whether you're going to try to open up the corporation or LLC yourself or hire someone to do it for you, I still think it's very important for you to understand the concept. I'm going to give you a little bit here, and then I'm going to push you off to Google. There's lots of great information out there. But starting up a corporation or an LLC is actually the simplest part of the process. And it's my opinion that you are smart enough to do this yourself. This is the part of the process I think you can do by yourself. It's pretty simple. Let me walk you through the steps. If you still feel like you don't want to do this and tackle this on your own, you can always hire a company that sets up a corporation or an LLC for you. But here is what needs to happen. First thing you need to do is you need to choose basically what you're going to incorporate. Are you going to be a corporation or are you going to be an LLC? Let me give you a quick rundown of the differences between the two, and then you can do a Google search and find out more information. The differences between an S corporation and an LLC are almost zero. They're very, very similar. So a C corporation, or remember Canadians, a Canadian corporation, this is basically a closed corporation in the fact that it pays its own taxes, it pays its own expenses. Everything is paid by the corporation. An S corporation is different in the fact that the shareholders pay the taxes. So that's the big difference between an S corp and a C corp. An S corp is called a flow-through corporation because the income comes into the business, but the taxes are paid by the shareholders. So if you and a partner, you and your spouse, are 50% owners in an S corporation that makes $100,000 for the year, you are liable for $50,000 and your partner is liable for $50,000. You have to pay those on your individual tax returns. A C corporation, the corporation pays tax on $100,000. Now, one of the reasons why people don't love C corporations is because you run into a situation where you could be taxed twice. Let me give you an example. Let's say this C corporation made $100,000 this year. At the first of next year, they'll be liable for taxes on $100,000 of income. Let's say they pay that tax, let's say it's $25,000, and then they decide to pay $75,000 out to the CEO, which is you. Well, wait a second. This is going to be taxable income to you as the CEO. They paid you a wage. You already paid tax on that $100,000. You get to pay it again on the $75,000. So the rule of thumb is your C corporation should always make $0 at the end of the year. So if you have $100,000 income in your C corporation, well, guess what? You're going to get a nice bonus at the end of the year for $100,000. They're going to pay a wage of $100,000 to the CEO. That's going to be a deduction. That corporation filed its tax returns with a 0 in tax liability, and you as the CEO need to pick up $100,000 in your personal tax return. So as you can see here, a C corporation just got to make sure that the profits are out of the business, paid out in a bonus, paid out as dividends. There's lots of ways you can pay it out. You can buy yourself a car, you can buy an investment. There's lots of things you can do with that at the end of the year with the C corp. For the most part, newer traders are going to be best with this S corp or an LLC. An LLC is called a limited liability company, and it's virtually the same thing as an S corp. If you really want to know the differences between the two, go and Google it. You'll see that they are very small. They work the same way. Now, in an S corp, the shareholders pay the taxes. In an LLC, the members pay the taxes. Basically the same thing. As a member, you're going to own a percent of the company. If you and a partner are 50-50 owners of an LLC, and the LLC makes $100,000 in taxable income that year, you owe tax on $50,000, they owe tax on $50,000. So the S corp and the LLC are probably going to be the best place to start. Most people start with an LLC. I'm going to leave this up to you to do a little bit of research. The reason why most people go with an LLC is they are a little bit cheaper to start up. They're a little bit cheaper to renew with the states every year. We're talking, instead of $75, it's $50. But if you're not getting any more benefit from an S corp, then the LLC really does make a lot of sense. So you need to choose your entity, and then you need to choose the state, or in Canada, the province you want to incorporate. Now, sadly, Canadians, you basically have one corporation. It's a C corp. So remember, we talked about a C corp. Just make sure you pay out your income by the end of the year, and you'll have to pick that up on personal taxes. Once you choose the state to incorporate and organize, you simply go to that state's Division of Corporation website. Now, the first couple of corporations I remember starting, I had to draw up my own articles of incorporation. And it was a little bit confusing. It was a little bit overwhelming, but I had to basically write up my own documents called the Articles of Incorporation. The last few corporations and LLCs I've started, basically I went online to the Division of Corporations. I filled out a questionnaire, and it literally created my Articles of Incorporation for me. And I simply paid the fee and printed it out, and it was a done deal. It's very simple. So again, you have to have a name chosen. The two things you need to have is a name and a registered agent. A registered agent is the person that the state contacts in case they have any questions. And the rule is the registered agent has to live in that state. So if you are incorporating in the state you live, then you should just be your own registered agent. If you are incorporating in a different state, there's some tax reasons why, but I'll let you follow into those so we don't waste a lot of time. If you choose a different state, you are going to have to hire someone to be your registered agent. There are plenty of firms out there that for $100 will get your junk mail. And that's basically what happens. Once you register as a registered agent, understand that that is public information, and banks are going to send you credit card offers, and people are going to start sending you some mail. So if you do not live in your state, you're going to have to hire someone else to get that mail, to be your registered agent. So once you file those, you are now registered with the state. You are officially an LLC or a corporation of that state. However, we also need to register with the IRS. We need to go in and basically tell the IRS, hey, we started this business. Here are our articles of incorporation that are confirmed by the state. And you need to file Form SS4, which is a request for a tax ID number. This, again, is a very simple process. This used to be I had to call in, they would send me a letter, like 2 weeks later you'd get your tax ID number, which in today's time, that's like 4 years. You know, hey, I want to get this thing going. I had to wait for that letter to come before I got my tax ID number. Now, it's all done online. You get your tax ID number right away. So you print that form out, the official confirmation, yes, I now have this tax ID number. Now, at that point, once you have your articles of incorporation or organization, and again, I didn't clarify, articles of organization are for an LLC. Articles of incorporation are for an S corp or corp. Then you can go into banks and brokerages and open up business accounts. So that's going to be the next step, is to take your articles and your tax ID number into a bank and open up bank accounts. If you want to open up trading brokerage accounts, you could open up trading brokerage accounts in that name. All right, now this, again, I think you can do this on your own. I think you are all smart enough, intelligent enough to do this on your own. If you do want to get some help, there are firms out there online. Again, just do a Google search. There's plenty of firms on there that will probably charge you somewhere between $250 and $400 to basically facilitate all this for you. A lot of them include the cost that would be with the state. So states are usually between $50 to maybe $150 for their fees. So usually that includes those fees as well. So if you want to get a little bit of help, there's firms out there. And basically, in the end, they will send you your articles of incorporation and your tax ID number. You now have to go and open up bank or brokerage accounts. That's the point I think you're plenty qualified to do on your own. After that, this is when you need the help. This is when you need some help. So let's go through, let's kind of go through exactly what to do. So again, file the paperwork with your state. Now if you file this year, you can actually go back and include all the income expenses from the prior year. So if you spent money last year, as long as you incorporate this year, you can go back and fill out last year's tax return. They allow you to do that. Technically speaking, I think you can go back 2 years, but I think that's, I don't know anyone who's going to do that. So if you don't get it done until the 1st of next year, no worries, you can go back and deduct all the expenses from this year out of it. You choose your state. If you choose a corporation and you want to be an S Corp, you have to choose your S Corporation. So you have to elect to be an S Corporation. Again, all this, go online and go figure it out. All right, you do want to choose mark-to-market accounting. At Maverick, we always do a year tax or a first of the year tax video on what to do to get your taxes ready. One of the things we talk about is mark-to-market accounting. Mark-to-market accounting is basically where you don't choose every single trade, but you say, I'm going to report how much money I had at the first of the year, January 1st, and I'm going to close it on December 31st. Now, mutual funds do this all the time. This is how they work. This is how hedge funds work, is that they just basically say the value of the portfolio was $100,000 at the first of the year, and it was $150,000 at the end of the year. Now, there might be some stocks they've held for 4 years in there. It doesn't matter. Mark-to-market accounting basically takes a snapshot. What was the value at the first of the period? What was the value at the end of the period? The difference between that is your taxable gain. Remember the story I told about having to put together every single trade I make, buy and sell. Mark-to-market accounting, you don't have to do this. It's a very simple return to make. All right. How much did my account start out with? How much did it end with? How much money did I put in? How much money did I take out? That is your gain or loss. So it's just very important. Now again, this Form 3115, you simply file that with your first tax return. So the first year in your tax return, make sure you elect mark-to-market accounting. If you do not elect mark-to-market accounting, you can elect it this year, but there are some rules that say if you can and can't do it. If you have a loss this year, you cannot choose mark-to-market accounting if you didn't do mark-to-market accounting last year. So go on to Google, find out if you can elect mark-to-market accounting this year. All right, so as you can see here, pretty easy process. Go ahead and get started. I always get a question about, specifically your relationship with Maverick. Right now, if you don't have a corporation open, it's just fine. But at some point, once you get your corporation, you want to let us know. If you're already a trader for us, say, hey, you know what? I'm now trading as this corporation. We are going to hire your corporation as a trader. We're going to hire your corporate entity, and you are simply the CEO. So we basically just need your tax ID number, and that's where we're going to issue all the tax documents. So at the end of the year, if you've got a $10,000 profit, we're going to send that 1099 to your corporation or LLC. At the end of every year, we reach out to our traders and just say, hey, make sure that we have your correct name on file. If you want it paid to an LLC or corporation, make sure you let us know, and we can pay you out to that corporation or LLC. All right, as I said, getting your corporation up and going, easy. Going in, starting up bank and brokerage accounts, easy. The hard part is the accounting. The accounting is the hard part. And if you don't want to spend a lot of time and research learning how to do trader accounting, let me direct you to two places. Traders Accounting is a firm down in Phoenix. They've done a lot of great stuff for our traders. They're a great resource to go to. Also, Green Trader Tax or Green and Company. Bob Green is the premier authority in taxes as a trader. He is the top. He's also the most expensive, but he is going to be the absolute best resources. A lot of people say, well, what about my CPA? Can my CPA do this? I have found it's about half and half. Some CPAs are pretty progressive. They understand some more complex things, and they can do this just fine. So if your local CPA, your person that you already have doing it, you approach them and says, hey, I'm doing this new business. If they say, you know what, yeah, that's going to be no problem, then you can probably go with them. But if you go to your CPA and explain to them what you're doing, and they either try to talk you out of it, or they say, I don't know how to do that, it's a real clear sign that they are not qualified to handle it. And this is where you either have to look into doing it yourself or look into some reputable firms that know how to do traders accounting. So it's a question I always get. A local CPA, can they do it? Technically, yes. Realistically, you're going to have to go in and find out some questions. But let me direct you to the last one, google.com. I know that sounds a little condescending, but it's meant to be. I've had to really train my wife over the years. My wife is not all that computer savvy, and so the internet, she's gotten much better. But let me say, about 5 or 10 years ago, she would wait for me to come home and ask me, well, how do I do this? And I don't know how to do this, so I would get on Google and Google how to do it. And I'd say, oh, this is how you do it. And then the next day she'd ask me another question, and I would get on and Google it and show her this is how you do it. And finally, I remember one day she's like, hey, I need you when you get home to show me how to do this. I said, Mickey, Google it. It'll tell you how to do it. So she didn't take that all that well because, again, it's a little condescending to say to someone. So my apologies. But Google it. With a little bit of time and effort, you can do a lot of great stuff, and you can really figure this out. So I'm going to send you over to Google, and hopefully don't take that as an insult. If you do have any questions, please feel free to reach out. I will probably Google it for you and send you a hyperlink. I'm just kidding. No. But if you have any questions, I'm definitely the person in the firm to talk to. I have learned way more than I ever wanted to know about entities and taxes, and I do like to share that with our traders. All right, thanks for joining me, everyone. Go ahead and get incorporated. I'm telling you, it's one of those things that regardless of whether or not you make money in trading, this will make a return on investment. All right, goodbye, everyone.